Hello guys and girls, and welcome back to AFT. In the Advanced Falcon Trader, we are going to be talking about something very important in this lesson, which is how you are going to implement this into the live environment. How can you learn from this ongoing to ensure that you're learning from your mistakes and you're filtering this out so you improve. You're not just going to get this refinement straight away and suddenly be, boom, know how to use it in every single scenario. It will take time for you, but you have something to focus on, something to move towards, knowing that once you improve, you're going to be at such a great level to be able to extract returns consistently out the market. What I also want to do before I get into the weekly performance sheet is just show you a few more examples of the refinement in action, more so on Aussie Kiwi, and a run through of these independent 5-minute flags. Now, just to clarify from a logistical point of view, you might be wondering, right, if we have a 1 hour flag, what do we tend to have? We have 6 to 8 1 hour candles. Is it the same thing when we drop down to the 15-minute, 6 to 8 15-minute candles? Well, does that mean the same thing for the 5? Yes. So if you're looking at 6 5-minute candles, that is enough higher in the run, and we'll see that in just a second. So if we start off with CAD Swiss again, you're familiar with this example. We've broken this down in detail, and there's a lot that you can learn from this that we covered in lesson 1. So if we work our way down and we go to the 5-minute, remember these independent 5-minute flags, they're high up in the run. This is what I want this to be about. High up in the run, you want to focus on them, because this is where the orders in the golden run, where they're being stacked. If you look at that for what it is, it would have been harder for you to see that on the 15-minute. However, if we count, and this is a good example because this is a slightly messier pair as a whole, so it can be quite wicky. We've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, you know, call it 10 or 11-ish, more than enough. So you can see it's one of those ones where they're borderline going to become a 15-minute flag, but they just consolidate enough and then they drop. You're going to see similar ones like this as well, where you see a tight bit of consolidation just below. This is a much messier one, but again, they're just tight little consolidations and then they drop out. But there's context behind even that tiny correction, because you've got this formation here, right, where you could have got involved in a reduce with a risk entry, right, and then you'd be looking for a reduced risk entry, and then it's giving you a tiny little correction only seen on the refinement on the 5 to be able to take that with your stop there. So again, we will get to more lessons in that, which gets a bit more ultra advanced. However, can you see how you wouldn't have even spotted that? You wouldn't have even seen it even when I went over it, which is why I've gone back to this example. But 6 to 8 5-minute candles is more than enough before these things drop out. So that is that on the 5-minute example. And to clarify in terms of return, you would have roughly got, yeah, so 10 would have been pushing it, right, because it can be a bit spiky and wicky, and then you would have got out in total roughly anywhere between, you know, 3.8 to 4-ish%. So had more than enough there, and of course the refined 15-minute one would have been beautiful. So you're going to understand that there's going to be a lot of these 5-minute corrections that appear below structures. Now, some are more clearer than others. However, use them wisely, and if you just focus on these ones high up in the run, then you're going to be absolutely fine. You'll make more profit alone just by taking these. Seriously. That's why I said stay away from reversals, just focus on continuation. So next continuation, again, another simple one that we want to cover is high up into the run. Right, we're high up in the run, we've negated the move, and then we've got that first 5-minute flag. Right, so this is the independent flag within itself. So we've got our trade below the low, and you can see the structure there. This could easily be one that either tags you out just about for a 1% loss, right, because we do take losses as well. It's not going to be refinement, everything to win. Let's say, for example, it would have been easy for you to have, let's say, call it about 24 pip stop with the spread as well. Again, going back to the 1 hour chart for management, right, whether it's 24 or 22, I'm just showing you roughly here, because in that moment you would have put it roughly around there. You could have easily not moved it to break even just yet, because remember, not just because anything is at 1% you move it straight away. So you could have seen, right, been a bit more lenient, I'm at the top of the structure, it's pulled back and it's literally just tagged me out and it's dropped. Yes, there was the re-entry there, but just see it like that not every 5-minute trade that you take that's refined will be a win. But the way I see it is this: mathematically, because you're getting involved in these positions, you can take a loss here and there, because you're not taking tons and tons of trades. Let's say you're only taking, on average, 5 trades per month. Well, you might, with the 5-minute refinement, end up taking 8 trades per month. If you're usually taking 8, you might take 12. It really does depend on the type of environment that we're in. However, mathematically, let's say you did take an extra loss per month versus what you're usually taking. Well, just by getting involved in these mathematically, you might have added another 7%. So you've literally increased your chances of succeeding at such a high degree just by knowing when to use it in the right moments. So that's the independent 5 minute there. And then of course we have the independent on pound yen, which is very, very simple. As you can see right at the top of the structure, something you should be noticing that has something in common is that the ones high up in the run that I've explained on multiple different pairs, these are not just dollar related pairs, for example, these are different scenarios, different type of characteristics, but they all have one thing in common. In the golden run, they stack those orders, and that is where you want to be involved. You want to take advantage of the banker's run. So when we look at that individual 5 minute flag, that's something you would have disregarded because you just wouldn't have seen it. And chances are you've missed a risk entry within here, you didn't see that trade, and then you definitely wouldn't see this one because it's too wicky on the 15 minute. However, even though that one would have resulted to a break even unless you took it as a risk entry, there was still profit to be made. But let's say even you didn't get involved in this one, you didn't get involved in this one, but you just got the first one, because you can't think that you're going to get every single trade. Let's say you got involved in that. Again, this is not your 10 pip stop style position. Call it 25 pip stop roughly. By the time you're out of the position, roughly around there, 2.4, 2.5 ish. So look at that even on a very small scale. Extra 2.5%. Imagine you've done that across 3 or 4 positions. You're talking 7.5%, 10% on things that you would look back and genuinely look at your ASR and go, never really committed. Yeah, but you're up 10%. You're still going to be happy, you're still up, you've still finished on 10% for the month. Now you're trading, say, 300k, you've made 30k. You're not going to be unhappy that the trade didn't commit. All you're going to look at is that you're now financially free and you've just made 30 grand. It's as simple as that. So even on the ones that I've personally seen that don't work out in the sense of the higher time frame, just didn't commit straight away, they're still banking us the percentage. And why are you here? You're here to make money. So I want you to understand the power of even these independent 5 minute flags. They are crucial. So I want you to test, I want you to send examples as much as possible. There's going to be ongoing support on a regular basis, so understand that. Last but not least, Aussie Kiwi. I want to show you another little refinement here that will just add a little bit of context. So if you remember Aussie Kiwi, which we're still in this area looking for this trade to the downside, so you can see higher time frame, double top, expanding, price comes up, it scoops up to the top, and we get this mini double top there that's more visible on the 4-hour chart. As you can see, we get that 4-hour double top. We start to reject. This one slept through the net for me. Broke to the downside. You can see that 1-hour rejection. And in here, how many hours have we got? We've got 1, 2, goes on the 3rd hour. So 2 hours gone. 15 minute, however. Okay, so the 15 minute, that could just look like messy consolidation. It would be so easy for you to go, I'm just going to wait for a little bit more. Easy once I put it in hindsight. However, the 5 minute clears it up for you. So on the 5 minute, you can actually see, this is the point I was making before, you can actually see the sections. So you see how we've been able to now identify and see it for what it is. And then you can potentially look for risk entry within the flag, or just take a simple reduced risk entry. So let's go more on the likelihood side of it, that you're going to see roughly around, call it 17 pip stop, roughly around there. So it's a trade you would have never got involved in. And on the 1 hour, you'd be roughly, talking about another 2 or 3%. Call it 3%. So 3% in 1, 2, 3, 4, 5, 6, about 7-ish hours. So in the same day, you still walked away with 3%. Can you start to see mathematically how this adds up? Right, and these are recent moves. These are not moves plucked out of, a year ago. I didn't want to go too far back because we'd just be scrolling and scrolling and scrolling, but just to show you how relevant this is to your trading. It's literally mind-blowing once you know how to do it. So that, very, very simple. And then we have the more complex one, which I'll show you. Was the one I took, so I missed that trade, was very aware of that. Then what do we have? And I don't expect you to be taking these trades just yet anyway, so again, there's a tiny little part here, but what I'm more so looking at, so we've got this parallel channel, and we have this 1, 2, looking for a potential third touch. However, we can scoop up to the override and drop. So we drop out, and you can see on the 15 minute here, we do technically get a rejection, but usually something with a bit of depth like that could easily play out for the middle section to give us that third touch, right? We'd be familiar with that. However, what do we see? We get the push down, it starts the flag. Well, that's not enough, where the 5 minute comes into play. So we've refined the move. So remember, I'm playing the volume with the higher time frame, and I'm looking for this volume to play out to the downside for continuation. Now suddenly, this is the trade that I took, because I had many examples of these. Again, another example of what I saw. Now, you could weigh up some pros and cons to think, right, well, can it just be part of that, and then it can just tag you in and tag you out, etc. Yeah, there are confluence factors to it. However, it had more than enough. After that push down, that override didn't commit, chances are, if it was just a near miss, so you see how this near miss like that usually is the middle section to go higher, which we had, and we eventually filled that. But we filled it in the form of an ascending channel, and we rejected where that would typically have moved to the upside. So now the context of this breaking this structure and forming this 5 minute independent flag, I was able to capitalize on it. So let's say, for example, average stop would have been roughly about 12-ish. So again, you can alter your stop. So this is one of those scenarios where you can get away with that. Then you go to the 1 hour chart. We look at management. You're out for roughly around 4-ish%, depending on your stop. Can go a bit tighter. So I'm giving you an example, again, of a trade that's not fully committed yet, that you wouldn't have even seen or capitalized on, and you still added that. So you add those two together. You see how another 3%, another 4%, a couple of days, you just added another 7%. So before you know it, you're weak. You've like, right, I'm up 7% there, took another 2% there. Before you know it, you're going to start to have these casual 7 to 10% weeks. It won't happen every week. But when you know and you're at the skill level to be unconsciously competent to take advantage of these trades, you will be flowing. I can't wait for it. From what I've seen already from you guys that have a bit more experience, so you know how to kind of deploy this straight away, it is a breath of fresh air to see you execute on it. And it leads me to the next thing here. So there's going to be ongoing support, ongoing lessons. There is actually a bonus episode that myself, Abdu and Ibi are going to be covering, which we're going to be sending out, and that's going to be part of this competition for Q3. We're going to be sending that out, and we want feedback from trades that you've taken, essentially. So in order for this bonus episode to be the best it can be, to answer all of your questions, we're going to do a technical Q&A. So our goal is for this, and it's going to put this weekly performance sheet that you're going to have resources and access to be able to use on a regular basis. This is how it's going to help. So you've got to do the work, and then we will make the content even better. So I mentioned at the beginning, there's going to be ongoing support, right? So what I want you to do is this. You're going to be making sure that you go through these stages. So before I go to the performance sheet, I want to explain 3 stages. So stage 1. Stage 1 is stop placement. I want you to do this. I want you to go over your last, call it 3 to 6 months of trades. The more the better. And I already explained this with the FX Live guys, and it has been crazy, the discrepancy in percentage. So I want you to go over last 3 to 6 months, and I want you to look at your stop placement. So now you know the new rule using the refinement and just refining your trades in general. You can go down to 10 pip stops. I want you to look over your trades and see what is the difference in percentage when you changed your stop for whatever it was to roughly 10 or 12 pips. Was there any room for refining there? I want you to go over that and take a look. Now, I want you to calculate the percentage. Share it in Slack, share it whatever you want. We want to see the difference. We want to help you out in that perspective. That will give you a confidence boost. You will see, wow, trades I've already been involved in just by refining them. What would that do to my performance? It might be the difference, and I'm really curious, it might be the difference between you having a negative quarter to a positive quarter. It might be the difference in you finishing Q1 on just 4% to 38%. I've seen some crazy discrepancies just by altering the stop loss in the right area. So that's stage 1. Stage 2, I want you to go back through your trades and now apply, knowing the knowledge that you have, the refinement. I want you to see, were there any trades that you could refine, whether they were extra independent 5-minute flags, whether they were 15-minute flags that you could refine, or they were actually 5-minute refinement trades that you could have taken within a 1-hour structure. Now, I know I said at the beginning, don't focus on those yet, but just actually test and see, calculate the percentage and see the difference there. So you can see for yourself of things that you actually understand, but now you're just going to refine them in the right way. It is going to complement your trading in such a positive way. So that's stage 2. Now, stage 3 is this performance sheet. So we've put this together for you to keep you on track. This is going to be something you can fill out on a weekly basis. Talk about treating trading like a business. This, from a mental perspective and technical perspective, is going to keep you in check. Now, you have to have the discipline to do it. If you're sitting there, genuinely sitting there thinking, at the end of the year, I want to be trading multiple 6 figures and 7 figures, and in 2023 and beyond, I want to be trading big capital. Well, do you have the discipline to follow something as simple as this, which is going to help you implement this in a live environment? It is so simple, yet so effective. So we'll take you through it. All you need to do is tally from a numerical point of view how many trades you took. Wins, losses, your P&L, and then you want to take your number of trades you've taken on the 1 hour entry, number of trades position on the 15-minute entry, and positions taken with the 5-minute entry. Now, the 5-minute entries can literally be, because this is your executional time frame, right? So the 5-minute entries can be a combination of risk entries that have been filtered on the 15-minute and also those independent 5-minute flags. Then you're going to go through a simple ASR, but it's structured in a way that's going to help you implement. So did I miss any trades? If yes, why? The why is important. Could I have refined any of my 15-minute flags onto the 5-minute? Potentially take a risk entry or a tighter reduced risk entry. Because in certain scenarios, those 15-minute flags that are a little bit messy, that just essentially confirm the 15-minute flag using the 5-minute, you would have been able to get a tighter reduced risk entry. And in some scenarios, you would have been able to get a risk entry within the flag. What's the difference of percentage going to be? Could you have refined it? And once you've seen enough examples on a subconscious level, you know how to deal with it. Were there any additional entries on the 5-minute not visible on any other time frame? You're going to start to notice those a lot more high up in the run. Remember that. Were there any losses that could have become break-evens that if I had taken them on the 5-minute? So those trades in which you could have taken a 1% loss now become break-evens. Think about from a psychological perspective how important that is and how you will feel mentally. Remember, we always say don't carry your emotion on to the next trade. However, in the earlier stages, it's sometimes difficult not to. So it does happen, and it takes time for you to become more detached away from the emotions of the market, because you want this to happen badly, and I get that, and that's why it takes time to do so. So question number 5, how much better could my week have been if I'd refined my entries? And give a complete breakdown. This of doing the work is where it's going to get very clear to you, because you actually have to think right now, and you get to see visually, you get to see the entries, complete breakdown, do the work. My recommendation is this: dedicate a time, like I say with ASR. Pick a time. You're serious for Q3 and Q4 and beyond? Pick a time every single week to say, this is now my time. This is going to be a necessary ingredient for you to be able to know how to implement this refinement to make profit. So this now becomes a very serious part of your growth. So dedicate a time. Some of you operate in a bit of chaos and you have kids and all kinds of things. I understand you have to make it work. So work with what you've got. But if you can have a dedicated time, stick to a dedicated time, set those strong boundaries, and you'll get more. It's the same thing. If you have consistency even in the time that you do your ASR and go through this, think about it. The more consistent you are as an individual, you tend to get consistency in other areas. And it's the same is true for when you're refining and doing that deep work as well. Brings me on to the last stage, which is your preventative plan. For the positions that did not meet my plan, why were they taken? Right, so you have to ask yourself, why were they taken? Were they taken because FOMO? Were they taken because you saw someone else take them? Were they taken because you just didn't really understand, but you just done it anyway? Were you indulging into self-sabotage? And you go down and you want to start to see week in week. You can literally look through and go, oh wow, I'm doing the same thing over and over again. So if you're doing the same thing over and over again, how can we put something in place to prevent it from happening? How do I prevent this the next time? So you identify the problem, there's a solution. For the positions that were high risk, low quality, why were they taken? So when you start asking these questions of why, and your mind goes, I don't actually know, well then that's a good thing, because you can start to work towards why is it happening, right? So why are you doing it? Is it because that you're getting agitated throughout the week, and then you're realizing, oh, I've not taken a trade, so you subconsciously start to lower the quality of your trades, and then you start to take them in higher risk areas. Why are you doing that? Is it a lack of understanding, right? Is it just more time and experience in learning through the content that you need to do? So it essentially pinpoints you towards figuring out your individual problem that you need to focus on so you can improve. It's really effective. how can I perform better next time in these scenarios? So now we go practicality. How can you actually perform better? Is it an element of concentration? Is it an element of you need to tweak your morning routine or your evening routine? Is it your pre-trade market ritual that you need to improve so you're more mentally prepared to be able to take these trades, which puts you more in an abundant state and not a low vibratory state in which encourage you to take low quality positions that are in high risk areas? So there's these personal things that you've got to overcome and break through, but these questions are going to help you do that. For the positions that could have been refined, why did I not refine them? Is this confidence issue or lack of experience? Explain below. You really want to get into detail of this, right? So when you see these positions and you're literally seeing them in the live environment, but maybe part of you says, I've never taken a trade with a 12 pip stop, so therefore I feel uncomfortable. Why didn't you refine it? Well, it may just be a confidence issue. So it's not something overcomplicated, but what you need to identify is that, right, it is a confidence issue, and all I need to do is just experience more of those positions and refining them to then play out. Now, what could be a plan of action to do so? Well, the next time you see a trade like that you're going to take with a 12 pip stop, but you hesitate because you've not built the confidence yet, what do? You open another position on a really small lot size, or if not demo, and see that play out. Now, on a subconscious level, your mind's going to start to see, right, there's nothing wrong here. This actually makes sense. I can take a trade with a 12 pip stop, etc. And then you start to build the experience and build the confidence. The success starts to roll in. And before you know it, you're executing on them. But again, these are all personal things that you're all going to go through. Everybody finds something different easier, and some people struggle with other things. The reality is, you're in your own lane, you're in your own journey, and this weekly performance sheet is going to be so simple, but one of the most effective things that you do every single week. If you can deploy this and listen to all 3 lessons and really take on board the points that I'm telling you right now, this is the best thing that we have ever had to the strategy that was right under our nose. It was literally right under my nose, and I was testing it from, to be honest, just a pure obsession to wanting to improve, because we have a much bigger vision and a much bigger picture here. And our priority is to make sure that you're scaling up to the highest level, which means refine when we need to refine. You don't need to jump to the 5-minute chart on every single thing that you do, but hopefully from the content that you've seen already, you're starting to just already understand, right, this is the areas that I need to focus on. If you literally just done that and you never touched a reversal and you never touched a 4-hour structure using the 5-minute chart, you would already make enough percentage alone. So don't make it a habit straight away to start jumping to any structure looking for the 5-minute. You do not need to. Focus and pay attention to exactly what I showed you to do, and if you follow those instructions, you will make profit, you'll make money. If you follow exactly the areas that I'm talking to you about. If you need any extra support, of course, feel free to tag us, chuck some examples in there. Our goal now, we want to get as many of you up to speed. The quicker you're at higher capital, the more chances you can actually make a plan to quit your job, move towards financial freedom, the meetups get bigger, people start trading more capital, and it's this incredible, positive, abundant circle. Guys and girls, you are part of something truly special here, and I'm so grateful to now deploy this content to you, so please take this at the utmost serious. It has hundreds and hundreds of hours going into this to get to this stage, just to explain just already this stage, let alone the content that's going to come out, hundreds of hours with just that pure passion that I know it will change your life if you focus on it in the right way. So I'm very, very excited and just can't wait to hear your feedback. So let's smash it, let's make it happen, and we have a lot to test, and I cannot wait to see you progress and hit those higher levels and achieve your financial goals.